There's no such thing as passive income. It's a pipe dream. It's a fucking lie.
I earn at least $2,000 from passive income.
Today we're going to talk about passive income streams that generate me around $9,000 every week.
Someone's trying to sell you something if they are prompting you to say passive income for life, replace your salary with dividends or with rent.
But in today's video, I'm going to share with you exactly how I made over $800,000 in passive income last year alone.
You can't do it. There's no such thing. No one gives you free money. Your parents are right. There's no money trees. It's never going to happen. However, if you do have assets, cash, property, there is a way that you can start to get paid. But that doesn't happen until you have that. So the first thing, you should click off this video if you don't have anything to invest, because I'm going to go through exactly how you replace your income once you've got assets. We're going to do it through dividend-paying stocks. On the ASX, we're all listed replacing $2,000 per week. Specific stock names. No, this isn't financial advice. This is for informational purposes only. This is how you would do it. But please note, not selling you anything. This isn't a pipe dream, and I'll tell you the specific amount of money that you need to replace $2,000 per week. I'm not going to say it. Passive income. Passive income. There's no such thing as passive income. You need the capital first before you can get any sort of income. I don't care what it is or what investment it is. So don't fall to any of those scams. As an advisor, I'm fortunate enough to see so many different financial products, financial investments, see client success stories of how they have built income now from doing, I'm not going to say it nothing, because they had to do something to be able to get nothing. But the best way that they can do it is when they have additional income or additional income sources to allow them to play the life of money and allow them to do whatever they want to do with that money. I.e., they've gone and got dividend-paying stocks that now pays them $200 a week. They use that additional income to go and have a holiday in Vietnam with their family every year, or they're really smart with their money and they use that to pay off their mortgage. So how does it work? Well, you invest into companies in Australia. Think BHP, think the Commonwealth Bank of Australia. They do their business here. They make profits. They pay tax on those profits. And then after that, they pay their owners or shareholders, which if you have those stocks, not saying buy those ones, but if you have those stocks, they pay you each quarter or each 6 month a dividend, a portion of those profits each year. Now, BHP and Commonwealth Bank of Australia have been in the top 10 dividend-paying stocks in the world, which is nice. So if you own them, they share their profits with you. You're just basically owning the best businesses in Australia, or the biggest. Not saying they're the best. You don't have to worry about rent. You don't have to worry about landlords. You don't have to worry about paying insurances or rates or water or fixing the roof or anything like that. Someone putting a hole in your wall. You don't have to worry about any of that with dividend-paying stocks. You've just got to make sure that that company continues to be around. And if you're in mining in Australia, Broken Hill Proprietary Limited or BHP, been around for 140, nearly 150 years. So how's it work? It all sounds nice. Passive income, don't like the word, but matching your salary. Let's say it's $2,000 per week. We're building a diversified ASX portfolio focusing specifically on high yield dividend paying stocks, ETFs or listed investment companies across different sectors like energy, mining, healthcare, gold, so that you can boost your after-tax take-home money in a really diversified way. But remember, markets fluctuate. It's about the long-term stability over quick wins. This thing isn't going to double overnight. Overcoming that impulse to chase hot stocks, diversity helps us sleep at night with that sleep at night test. And we're purely after the income, not after the growth with any of these picks here for this hypothetical portfolio that I'm going to run through with you right now. Here's a way that you can generate $104,000 as of October 2025 with $1,360,000. We're going to go into 10 individual ETFs, some stocks, and some listed investment companies as well, with a specific dollar amount in each of them, which is $136,000 in each individual pick. First off, we're going to start with an ETF, VHY, Vanguard Australian High Growth Dividend. Well, not high growth, it's high dividend paying stocks, specifically with $136,000. At the moment, it pays you a whopping dividend of 8.29%. Holy Jesus, that is a great dividend and one way to kick us off to start with. It works out to be $11,274 per year for your $136,000 investment. Nice start. The next $136,000 that you are going to spend is in HVST. It's a beta shares product as the manager, Australian shares income investment for you. A little bit less of an income at 7.3%, or $9,928 for the year. It's got a little bit of a financial product in there with options, but for that, it pays you monthly, not every quarter or every 6 months. There's a little bit more risk here with this product because of the options play, which is a financial product where they are buying and selling, betting on the price, but you have beta shares to manage that risk for you. The last of our ETFs is YMAX, YMAX. Now it's invested in the top 20 Australian companies only, and it's an equities yield maximizer ETF, currently paying around 9% as a dividend for your $136,000 investment, which works out to be $12,240 per year. Not too bad. That's the last of our ETFs. Very similar. Now we're going to kick into listed investment companies. So companies that actually go into the Australian market and are actively managing their portfolio to pick specific stocks. We're going to start with WLE, which is WAM Leaders Limited, currently paying a nice dividend of 7.75% or $10,540 for the year. Pretty nice. The next, now this is an equities, although you buy this as an equity acquisition, but this is more into the fixed income play. So a little bit of bonds, a little bit of corporate debt, and what you are doing is you won't get really great growth on this, but you're more just after the income, which is this portfolio that we are putting together, and this is the really diversification play in here. It's the Metrics Master Income Trust, MXT, as a listed investment company, and it's paying about 7.68%, which pays you $10,445 for the year. Not too bad, gives us a bond and corporate debt exposure rather than just pure equities. Always remembering that this is not specific advice. I have not assessed your personal circumstances. Please don't have this as a solicitation to go and buy anything or any stock mentioned. This is purely me for informational purposes around how you would replace $2,000 per week in income if you had $1,360,000 in capital. Rightio, we're going to dig into specific stocks or stock specific. Now, this is going to come with high variability in your portfolio because it is one asset. The first one is Woodside Petroleum, WDS. Woodside Petroleum is in the energy sector, oil and gas, and they pay a cracking dividend of 6.68% or around $9,085 for the year. High variability in the equity price of this. The next one is also in the energy and mining sector. It is Fortescue Metals, FMG, a big favourite for Aussie investors, and it pays a cracking dividend yield of 5.4%, which is about $7,412 for the year. The last one, and our lowest paying, dividend paying stock at the moment to get into the healthcare sector, is Medibank Private at MPL, and a little bit less of a dividend yield at 3.73%. or $5,073 for the year when you have $136,000 invested. Being in Australia, we have to throw some real estate in there. We have a real estate investment trust from Charter Hall. CQR is the ticker, and it is into retail, industrial, commercial properties, which gives us a broad allocation to property in Australia with Charter Hall as the manager, and it pays a 6% dividend yield or around $8,201 with your $136,000 investment. And the last one, GQG, which is basically like a listed investment company. It is a company that goes and invests into different assets around Australia. It pays the best dividend yield at 13.15% or $17,884 for the year for your investment. Now, this is based off the last 12 months worth of dividends. But that's specifically how you would replace $2,000 per week or $104,000 for the year with 10 stocks, ETFs, listed investment companies, real estate, plus also some little bit of debt in there, in corporate debt, and also a financial investment company. So if you had $1.36 million and you wanted to replace your income, it's basically what they call fuck you money. And fuck you money is when your boss tells you that you no longer have a job, or your boss tells you that he wants you to do something. You can turn around and say, fuck you, politely, but I don't have to work for you anymore. I've got income coming from somebody else or somewhere else because I own the best businesses in Australia and they're fortunate enough to pay me an income for the rest of my life. $1.3 million is a lot of money to invest. And hopefully this isn't the only $1.3 million that you have, because this is in the equity market and there will be some variability in that $1.3 million over time. It won't stay there. It will go up. It will go down. But what we're really after is the income. What about inflation? Well, the good thing about all of the businesses in Australia is that they have been steadily increasing their payout ratios each year. So that income of $104,000 for the year, it'll tick up each and every year, keeping pace with inflation, hopefully. If you're working your way up to these dividend-paying stocks, well, you're probably more after growth and this portfolio is probably not for you. However, if you are after that income, I would start with an ETF so that you can have a diversified portfolio in one single stock and you can start to get that income. Whether you use that to reinvest and buy more of that particular stock, keep reinvesting that money until you hit that dollar figure, well, that's up to you. You don't have to start with the $1.36 million. You can work your way up to that. But that is what you'll need if you are looking to specifically replace $2,000 per week of income. Also, these past payouts in the last 12 months are not guaranteed into the future. If you are looking at something like this, as I mentioned, it is for informational purposes only. Don't take this as a grain of salt to go out and buy this specific portfolio. I don't want any emails or phone calls saying that your $1.3 million is now $700,000 because the market's dropped or the income has dropped. This is just for informational purposes only on how you may structure something like this. If you are after advice, please get somebody to assess your personal circumstances. Please don't go and overextend yourself in financial markets or have money that you are not willing to lose, because when you do go into financial markets, you're willing to lose that money because it can happen. As always, with investing, capital is never guaranteed, but income maybe.
Thanks for tuning in to another episode of Your Wealth Playbook. If you could help us out in any way, the biggest benefit that Jared and I, and also Danny, will get is if you can subscribe to this podcast on your favorite platform and maybe share it. Send it to somebody that will benefit.
The information in this podcast is general and does not consider your personal objectives, financial situation, or needs. Before making financial decisions, consider whether it is appropriate for you and seek professional advice. Past performance is not a reliable indicator of future results. If you would like to discuss today's topic further, reach out and we would love to help.
Jared and I have not assessed your individual circumstances. Therefore, this podcast is general in nature and for informational purposes only. This is not personal financial advice. There are so many advisors and brokers in Australia. You'll find one that you resonate with, but this is for informational purposes only. Or maybe just use Jared and I.